Hello and welcome. In this video, I'm sharing the reporting requirements by IRS, which is the Foreign Bank and Financial Reporting requirements, which is FBAR reporting. I'm taking up the IRS FBAR reference guide. This is available on the IRS website. I will also put the link in the description, right? So let us go through. I'm just taking you through the main provisions that are there. So this is the table of contents: introduction, purpose, who must file the FBAR. Now, basically, the purpose of the FBAR that is mentioned is that for the US persons, right, who maintain overseas financial accounts. That means a person who is a resident of the United States and who maintains any financial accounts outside the United States, any financial accounts located outside the United States. So basically, there is an increased chance. So because uh, there is this increased chance of the person not reporting the accounts, the income from those accounts to tax. This reporting requirement exists, right? So basically, who needs to file, right? So basically, it is that US person must file an FBAR if they have a financial interest or a signature or other authority over any financial accounts outside the US, and the aggregate amount of the accounts exceed $10,000 at any time during the calendar year, right? So first it has to be a US person, right? Second, the US person has to have a financial interest or a signature authority over a financial account. So we are talking here about financial accounts, not other accounts like real estate and everything. It has to be a financial account. It has to be a US person. We'll come to the US person. And there may be two things: either a financial interest in an account, that means you have a bank account in India, which is like you have like 10 lakhs or 20 lakhs in that bank account, an arrow accounting, or it is like a signature authority over any financial account, even though you don't have any income from that account, but even a signature in that account, that also qualifies. However, the reporting requirement arises only when the aggregate of the amounts in the accounts is more than 10,000, exceeds $10,000 in a calendar year. So the reporting is calendar year specific, and $10,000 and above, if the amount is there, only then the reporting gets triggered, right? Now, important thing to understand, it is only on US person. Who is a US person? I've made a separate video on the residential status under the US tax law. US person here, the definition is a bit different from the definition the for income tax for US income tax purposes. Here it is citizen or a resident of the United States. Citizen, that means a US citizen, or or a resident. Resident basically includes the two things: either the person has a green card, or the person fulfills the substantial presence test. That means basically 183 days in all, 1 2 3 3 years. So that is the requirement. So if you qualify that, then you are bound to report. If you are a non-resident alien, you don't qualify. You are neither a citizen nor you are a green card holder, nor you are fulfilling the substantial presence test. Then this reporting requirement does not apply to you. It's only on the US persons. Now, entity entity created, organized, or formed in the United States or under the laws. So, for example, you have a LLC or a S corp in United States. You have created that, so that entity is also responsible. That entity also qualifies as a US person for the reporting requirements. Third is an estate formed under the laws. So, if you have an estate that is formed under the laws of the United States, that also qualifies as a US person for the reporting purposes. Now, there is a provision on disregarded entities, that US persons that are disregarded entities may need to file it. So, disregarded entities may be a single example is a single member LLC, which is considered as a disregarded entity because the entire income from that particular entity is taxed in the individual's tax return. So, they also may need to file an FBAR, right? Okay. So it says the federal tax treatment of an entity doesn't affect the entity's requirement to file an FR. So this is also an important, right? So then there are the provisions that are given about whether a person is a resident or not, right? I'm not going into the. Then there are even examples that are given, so you can go through. Now, coming to financial accounts, it says that the financial accounts include bank accounts. For example, as an Indian person, if you are in Indian NRI, So it may be a NRO account, NRE account, any NRE time deposits, right? Any deposits that you have with Indian banks. Securities, that means any brokerage accounts that you have in India, right? Any securities derivative, any financial instruments accounts, right? Uh, Commodity futures options, insurance. Insurance will only trigger where it has a cash value. For example, if you have a term insurance in India, it will not qualify. It is only a whole life insurance policy which has a surrender value or a maturity value, that will only trigger a cash value. Or if the cash value is existing, then only it will qualify. Then mutual funds, even like for example mutual funds, if you have mutual funds in India, it will qualify. Then uh, now important to understand here is that the fund should be available to public. Now for example, if you talk about a PMS, in my view, given the provisions, PMS will not qualify. It has to be some public kind of a fund should be available for public, right? So only a mutual fund will qualify. A PMS will not qualify for this reporting. It may qualify for other reportings like form 8938, but not this reporting. Then any other account maintained in a foreign financial institution, right? So now for example, that is like given like Canadian Registered Retirement Savings Plan, RRSP. These are all included. For example, we in India we have the new pension scheme, national pension scheme, and NPS will qualify. A PPF account will qualify, right? Okay. Now then, foreign hedge funds or private equity, since these are private funds, they will not qualify, right? Okay, so you need to be clear on what accounts you need to report, right? Okay, so there are certain examples that are given. Then maximum account value. So then there is a guidance on. I will not go in depth. You can study this report, study this guide, but I'm just taking you through the overview. So how to calculate a maximum account value at any point in time during the year? The If the aggregate value is more than 10,000, then you need to be reporting it. Now, there is an example. So it is given that to determine the maximum value of a foreign financial account, first determine the maximum account value in the currency of the account, right? For example, if it's an Indian account, first determine the value in the Indian currency, then convert. First, determine the maximum account value. So, for example, the balance in a particular NRO account was 10 lakhs, INR 10 lakhs, right? So you determine in a INR terms the maximum value. Then you convert the maximum account value to for each account into US dollars, using the exchange rate on the last. So for example, 2023 you are doing this reporting, then you calculate as on the last day whatever is the exchange rate that is available, USD INR exchange rate as on the last day, then you convert it, right, in US dollars as on the last date, to find out whether you breach the US dollars 10,000 threshold for the purposes of. So this is slightly complicated. If you have too many accounts, then you might have to do some working in Excel to do this. The to find out the US, the uh, uh, exchange rate, there is a link that is given, treasury reporting rates of exchange. This is a link which takes to the treasury website of the United States Treasury website, where you can actually find out what was the day on December 31st, 2023, what was the rate that was available, right? So then now here are some examples that are also given, that individually the accounts may have balance less than 10,000, but at an aggregate level, at any time during the year, at an aggregate level, if it is more than 10,000, then you need to. Then it talks about that financial interest, right? For example, if you have like a ownership in a trust, or you hold a power of attorney for on behalf of any other person, then also you need to report. And the other person, if you like, for example, you are holding a power of attorney. This example is given. John is a US citizen. His brother Paul maintains bank accounts in Mexico on behalf of John. The accounts are held in Paul's name, but Paul only accesses the accounts following the brother's instructions. So in this case, John, since he has a financial interest in the maximum Mexican bank accounts of Paul, John, and John is a US citizen, John has to report in his FBAR reporting. Similarly, even if Paul is a US citizen or a US resident, even Paul will have to report the same accounts in his FBAR reporting, right? So that is how the reporting, both people have to report the same accounts in their individual reportings, right? Okay, then talks about signature authority. For example, here this example is given. Megan, as a US resident, has a power of attorney of her elderly parents' accounts in Canada, but she never exercised power of attorney. So even though you have never exercised the power of attorney, or the incomes, there are no incomes from those accounts, still you have to report. So Megan must file an FBAR if the power of attorney gives her signature authority over financial accounts. Whether or not Megan ever exercised authority is irrelevant, right? Then there is this thing about jointly held accounts, right? So if there are two persons who hold joint accounts, both have to report. Only exception here is available to a spouse, whereby one spouse can report the accounts of the other spouse. And there are certain conditions that all financial accounts of the non-filing spouse must report are jointly owned. Both all the accounts are jointly owned. Filing spouse reports the jointly account owns on a timely FBAR, electronically signed, and both spouses have completed and signed Form 114A, which is the record of authorization to electronically file the FBAR. So, in if these three conditions are satisfied, then only one spouse can report the accounts, include the accounts held by the other spouse. Otherwise, both the spouses need to report individually the accounts in their own FBARs, right? Now there are certain modified reporting requirements that have arisen. Now take into account a person who has like 50 accounts, right? So in such cases, you can go in the FBAR report, when you file the report, there is an option to check mark. If you have a financial interest in 25 or more financial accounts, then you don't need to individually report the accounts. Yes, there is a requirement to keep the proper records of the account, because IRS can ask those from you, but you can just go ahead and tick the 25 or more checkbox. Or if you have a signature authority, then you can tick the 25 or more checkbox, right? Okay. Then there are certain relaxation. For example, if you as an employee of a company which is not a resident of United States, if you are holding a signature authority, then only you need to just give a basic information, so that relaxation is given. Then there are certain filing exceptions. That means following persons are accepted. That means they do not need to file. For example, consolidated FBAR. A US person that's an entity named in a consolidated FBAR filed by a greater than 50% owners. For example, I hold a LLC in USA, and I'm a single member LLC, and I hold like 100% ownership in an LLC. And if I reported that LLC's assets, if LLC owns anything in outside the United States, if I take care of that in my own individual reporting, then the LLC need not separately file. Then there are like exemptions with respect to IRA owners. For example, an IRA owner uh, holds any foreign accounts that needs not to be reported, or participants or beneficiaries of a tax qualified retirement plans, trust beneficiaries. So, example, if there is a beneficiary in the trust in which the beneficiary has a financial interest, right? Doesn't need to report the trust's foreign financial accounts on an FBAR if the trust trustee or the trust agent of the trust is a US person and files an FBAR. So there are certain kind of relaxations that are given, exemptions that are given, right? So okay. Then there are reporting requirements for. So basically, the reporting requirement is this, that you need to keep the the records of the accounts for 5 years from the due date of the report. So, for example, you have filed a report for 2023 calendar year on 2024 April 15th, 2024. Then 5 years from the due date, that is April till April 2029, you'll have to maintain the records, right? So those recording requirements are there. Then this is important, that there are certain penalties. There are certain civil penalties, then there are certain criminal penalties. See, all the countries take foreign reporting very seriously. For example, in India we have the Black Money Act, and under the Black Money Act, you are required. So there is no separate as such a reporting requirement in India. In India, you have to declare it as along with the in the tax return. There is a separate schedule, FSI and FA. Basically, the FA schedule you need to disclose the foreign assets. If you don't disclose, then there's like a flat 10 lakh penalty, plus jail, possibility of a jail term also is there. So basic point I'm trying to make is every country views foreign accounts suspiciously, because in foreign accounts there is this possibility of kind of stashing money in foreign accounts to escape the tax payments in the host country, in the resident country. So similarly here also in US, they have a separate requirement to file an FBAR. So if you become a US NRI, if you are become a US resident, you are working in US, uh, and you have financial interest in India, please take care to file this report every year. Now understand that this reporting requirement is separate from the reporting of foreign accounts in your 1040, right? Your tax return. That is separate, this is separate. However, you have to ensure that, for example, you are reporting 5 accounts in the tax return 1040 foreign accounts. You have to also report like the 5 accounts here. So it should not be that you are reporting like 3 accounts there and 10 accounts here. It should not be a mismatch. Ideally you should try and uh, ensure that the same accounts are reported. If you are confused, then please take help of a tax professional, a qualified tax professional, but don't mess up on this, right? Because there are penalties, there are civil penalties. Now penalties are like $10,000 and above. So there are not, like, it's not kind of some small penalties there. It's a big amount, and which, like in case of willful non-disclosure of filing false FBARs, which the penalties are very very high also. And also includes like 5-year prison term, right? So you need to be very careful that you need file the proper FBARs. Now if you, so there are categorizations, there are negligent violation, pattern of negligent activity, non-willful, willful. So there are separate penalties, right? Now right now, okay, due date. Okay, earlier there was a due date of, like, before 2015 or 2016, there was this due date of June 30th. But now the enforcement responsibility of this reporting has with the IRS. So they have kind of aligned it with the IRS tax return filing requirements. So you need to file a tax return by April 15th. You need to also file the FBAR with by April 15th. So, right now, good thing about the FBAR is that you get an automatic 6 months extension, right? So if you fail to file by April 15, 2024, right, so you get an automatic 6 months extension to file by October 15, 2024, right? So this is a great thing, right? You don't now, for example, if you want to file a tax extension, you need to file a tax extension for the tax return. File a tax. I have made a separate video on the how to get a tax filing extension in US tax return, that you need to manually file, manually or electronically you have to file. Here it's an automatic extension. So basically the effective date, the actual effective date is October 15, right? By October 15 you need to fill. Now here if you see this guideline, it says that if the filer does not have all the information available to file the FBAR by the automatic extension date of October 15, the filer should file as complete FBAR as possible and amend. So there is, in the electronic utility, there is a possibility to amend the FBAR. So that option you have, right? So you can go ahead and amend, but first make sure that you file it by October 15. Now where to file? Now understand this, you don't file it on the IRS website. This requirement is different. You need to file it on the BSA e-filing system. So you go on the BSA e-filing system, and there you get two options. You can file it as a PDF. You can like work on a PDF, get the PDF ready, and then validate and upload it electronically. Second is online e-filing, whereby you, it's like in an online session you update all the information. So what I personally prefer is the PDF version, where you can fill it up as per your convenience and then upload the final PDF. But depending upon your choice, you can do, right? Okay. Then there are the, if you have any queries, you can there are helpline numbers that are given, so you can ask uh, uh, in the helpline numbers, right? Okay, so this was about FBAR. You need to, as a US NRI, you need to be careful about what are the reporting requirements. If you are not clear, take help of a tax professional. If you have any queries, you can ask in the comments section, and I have helped you to the best of my ability. So this is it. I hope this video was useful. Thank you so much, and thank you so much. Bye.